What are the objectives of credit risk management? Why would an organization like to manage credit, and what goals would it like to set for itself? The first objective of credit risk management is to adhere to the credit policy set by the organization. An organization like a bank would typically have a credit policy which dictates what kind of credit the bank wants to provide, what are the goals of providing that particular line of credit, what are the different forms in which credit will be given, for example term loans, working capital loans, what are the terms and conditions attached to each and every one of those products, and how those products will be managed and the risk will be managed. The credit risk management process has to make sure that these policies are being adhered to when the lending activities are being done by the bank. The second objective behind credit risk management is to make sure that the adequate and proper database of all the credit activities is maintained by the bank. For example, you should have data of each of your customers. There is a KYC system where Know Your Customer system where all the necessary details of the customers have to be maintained. The adequate documentation, for example the agreements with the customers. If you have, for example, given the loans against mortgage of property, the mortgage documents and everything has to be adequately maintained. So maintenance of a proper database of your customers of all kind of credits is required, and therefore you would like to adhere to the credit risk management. Fundamental goal of credit risk management is obviously to manage the bad loans. The banks would like to make sure that there are as less bad loans as possible, that all the customers make their payment of interest on time, all the customers give their account statements on time, all the customers make the repayment on time. Now in order to do that, the bank will have to have a robust CRM process, and also will have to make sure that all these facets of the process are adhered to by the bank as well as by the customer. One more reason for administering the CRM process or credit risk management process is to make sure that the credit pricing is done properly. What is pricing of credit? Pricing of credit means the credit terms, for example interest and the periodicity of interest. Should the bank charge 6% or 8% in a particular case? It is depending on lot of factors. So if the pricing of the credit is proper, the bank will be able to protect its margin and grow its business. If the pricing is not proper, the bank might end up with bad losses and also will not be able to grow its business. One more objective of credit risk management is to make sure that the bank is able to grow its business. Now, banks would always like to have the best possible customers, AAA customers. But the AAA customers are not easy to find, number one. And number two, they will not give you very high rate of return. So you have to compromise. You have to go for, let's say, AA, A, B kind of customers. In which case you should have a good credit risk management process to make sure that you are having an optimum risk versus return in your portfolio and thus able to grow your business. If the credit risk management is done properly, then in that case the bank will be able to optimize the return to the shareholders. They will be able to maximize the wealth of the shareholders, because if the CRM is not done properly, the bank will end up with lot of NPAs as well as will end up with lot of liquidity issues, in which case the bank's equity prices will suffer in the market and thus the shareholders' wealth will be destroyed. So these are the objectives of credit risk management and credit risk management process in a bank or any other enterprise. I hope you have found this video useful. If yes, please do share this video and also subscribe to my channel. Thank you very much. Yes.